Hey everybody, welcome back to Retirement Clarity Radio. I am your host Scott Newhouse. Thanks for joining me. We are going to talk about should you put 1% of your money, 1% of your investments into cryptocurrency. Ric Edelman thinks so. I am not so sure. Now, unless you have been living under a rock for the last few years, you have most likely heard about the recent craze to make money, to make really easy money, to double and triple your money every single year, and that is cryptocurrencies. There are a ton of people talking about cryptocurrencies, and like everything in life, you really got to be careful about whose advice you take. There are just starting to be a number of prosecutions of insider trading in the cryptocurrency space, and my guess is we're going to see a lot more shady stuff to come out that's going to face some legal recriminations in the months ahead. So with something so new and something so hyped, especially on the internet, it's sad, but it's not surprising that there's so many people out there trying to scam other people, people lying about things. Yeah, sad but not surprising. So, while acknowledging that there are many bad faith actors in the crypto space, there are smart, honest, decent people who really do believe in cryptocurrency. And I want to focus on them, of course. And they really like cryptocurrency. They like the blockchain technology that it brings, and they think it's smart to invest in this new technology. Now, one of the good guys in the financial services industry is a gentleman named Ric Edelman. He's the co-founder of Edelman Financial Services, Edelman Financial Engines. They changed their name a couple years ago. It's a firm that has billions in assets, thousands of clients. It's just a giant company now at this point, and it was started back in the 80s with Rick and his wife Jean. And so they just started with no clients, and they built it up into this incredible big company. And he has recently shifted away from working at that company to focus some of his time on educating advisors like myself on cryptocurrency, blockchain, and really just making sure that we're at the top of our game in terms of understanding what's next in next level technology. So, full disclosure, I'm a big fan of Rick. I like his firm. I've messaged him a couple times on LinkedIn, and he was nice enough to respond. So I like Rick. Full disclosure, I think he's a good guy, and he's really meant a lot for me to learn how to be a better financial planner. He's also done a great job serving his clients. So, full disclosure out of the way, Rick does think that you should incorporate cryptocurrency into your portfolio. And so what I want to do is I want to explain Rick's strategy. I want to define crypto and blockchain, and then I want to move on to my thoughts about his specific strategy that he mentions. So Rick's advice on cryptocurrency is pretty straightforward. He says if you're going to have a 60-40 portfolio, and 60% meaning 60% in stocks, and then 40% meaning 40% in bonds, he thinks instead of that, you should consider having a 59% portfolio in stocks, 40% in bonds, and 1% in cryptocurrency. So instead of a 60-40 portfolio, he thinks you should at least consider a 59-40-1 portfolio. And so it should be said, no one, and certainly not Rick, is advocating that you put 10% or 20% or 100% of your money into cryptocurrency. That's crazy. Please don't do anything remotely close to that. Now, before we get into why Rick and other really smart people think that you should put 1% of your money into crypto, first, I want to make sure we understand just some basics about what's cryptocurrency and then what's the blockchain technology that's kind of a big deal. So a cryptocurrency is simply a digital asset that's able to be exchanged virtually, and it is not issued by any central authority like the government. And so the technology that allows these exchanges to happen is something called the blockchain, which is a database that stores information and it stores transactions. This is all a private, secure network. And so to add some much needed context in terms of how that works, the people who created Bitcoin, which is the most popular cryptocurrency, they were very, very skeptical of government. And a lot of them had a major libertarian leaning. Now, it wasn't just libertarians, though, who came up with this idea and really supported it. It was also, I don't know if you remember in like 2010, 2011, Occupy Wall Street, a more leftist group. They were actually big proponents of Bitcoin and crypto as well. So when you think about those groups, just think like really skeptical of government. And so that could be, libertarians, it could be Occupy Wall Street, some other groups, but that's like kind of what brought them together, really skeptical of government. And they were worried that the government did not do a number of things, including not respecting people's privacy, restricting people's access to their own money, and they were worried that the government continually prints too much money, thus devaluing their own form of currency, fiat money, what we use. And so that's really where the inception of this idea came from around a decade or so ago. And if you want a really interesting book on the subject, you got to check out Digital Gold, Bitcoin, and the Inside Story of the Misfits and Millionaires Trying to Reinvent Money. I'll try and put a link down below. I'm about halfway through. It's really well written and well researched. So with that context in mind, why does Ric recommend 1% in crypto? So let's examine Ric's rationale as well as my own thoughts on each point that he's going to make in favor of having 1% of your money in cryptocurrency. So the first reason that Ric says that there's a lot of misunderstanding about Bitcoin and crypto is that he says it's not a valuation play. You can't value Bitcoin the way you can with other assets. It's simply a supply and demand issue. There's no inherent value to owning Bitcoin the way there would be to owning a Dairy Queen. If I own a Dairy Queen, people are going to come, they're going to get the blizzards, they're going to get ice cream, etc. I'm going to get cash flows off of that. And so people like Warren Buffett, Ric says, need to wrap their head around the fact that you can't value Bitcoin the same way you can do with a company like Apple, which Warren Buffett owns, because Apple is a company that has free cash flow that it generates from the MacBook that I'm talking to you on. They get cash flow from the iPhone that I got up here in my hand and the iPod that I got in my bedroom. So Ric says these are completely different assets and you can't view them the same way. There's no free cash flow that's coming when you own one coin of Bitcoin. And so while it's undoubtedly true that you can't measure Bitcoin in that same way, in my mind, that doesn't make it any better of an investment. Like, this isn't a reason for me to get excited about owning it. If I accept that Bitcoin in and of itself won't do anything for me if I own it, then if I were to buy it, all I'm doing is hoping that at some point in the future, someone else is going to come along and they're going to pay a higher price than what I paid. Now, this is actually known as something called the greater fool's theory. It's the idea that prices will go up because people are able to sell to a greater fool regardless of the value or the worth of the asset that you bought. Now, on a very related point, I should point out that there's an inherent scarcity in Bitcoin in that only 21 million of them are made, and there will not be more made in the future, in all likelihood. Who knows if that might change, but the idea is there's only 21 million Bitcoins, so it's a supply and demand issue. And as we all know from our psychology classes in college, when a product is scarce, it just creates more buying interest. And that's clearly in play with Bitcoin. But even with that scarcity, though, when you buy Bitcoin, you aren't going to be able to say if it's overvalued or undervalued because there's no way to value it. So you're simply going to be wagering that someone in the future is going to pay more for it than you are. Now, the second reason Ric says you should be bullish on crypto is that he thinks there is real utility in this blockchain technology. And he's actually said that the blockchain technology that we have right now with crypto is in the internet stage of sending money. So in other words, do you remember those early days in the late 90s, early 2000s, how people flocked to eBay, AOL, Amazon, and that was kind of changing lives, and that was kind of bringing in the internet era. Ric thinks that's what we're experiencing with sending money, and he thinks the blockchain technology, the stuff that's driving it behind the scenes, that's going to be a key driver of this new way of sending and exchanging money. But my question to that is, don't we already have PayPal, Venmo, Cash App, and Zelle to send money? And don't all of those allow us to send a payment for free to friends and family? And so sure, the blockchain technology is interesting, but in terms of sending money, I already have multiple ways that are easier to use. They're safer in terms of my protection and my security. And best of all, they're free. So why do I need blockchain to send money? Why do I need crypto to send money? Okay, third reason Ric brings up is that he says crypto is an uncorrelated asset. So in other words, it does not move in the same direction as stocks. So in a well-diversified portfolio, you typically don't want everything moving at the same speed in the same direction. So having an uncorrelated asset is a good thing. Think about stocks and bonds. Now I know, in 2022, bonds are down and they're having a really tough year, but your stock portfolio, it's probably down twice as much as bonds. So those are uncorrelated, or at least there's some correlation there, but they're not one-to-one correlation. And so what Ric's saying is Bitcoin is not a one-to-one correlation with stock, and that's a good thing. However, I gotta say, and Ric's acknowledged this in May of 2022, so far this year, cryptocurrencies have trended right in line with technology growth stocks, which is the sector in the stock market that's really been hit the hardest so far this year. So in previous years, cryptocurrencies may have been uncorrelated to the stock market, but so far in 2022, they're highly correlated with technology stocks and the market overall. It's also never experienced a prolonged bear market, which we may go into, not a prediction, but we might. And frankly, it's going to be really interesting to see if this correlation that's been really apparent so far in 2022. Let's see if it keeps up. If the correlation does keep up, though, and crypto goes in lockstep with technology growth stocks, then frankly, that's not going to be too bullish for crypto. And that's going to knock away one of the reasons why you might want to consider it. The fourth reason people say, and Ric says, that you might want to buy crypto is that it's an inflation hedge, or at the very least, that's what people have said in the past. But in the last 12 months, with inflation rising rapidly, as we've all seen, Bitcoin and plenty of other cryptos in general, have fallen dramatically. So just like crypto being an uncorrelated asset, this rationale for crypto bullishness has not held up so far this year, or at least in the last 12 months. So maybe it was true a few years ago, but boy, crypto is an inflation hedge. It's just not there, and it's not even close. The fifth reason that Ric says you might want to consider crypto in your portfolio is that it's an option for rebalancing your portfolio, since it's not a correlated asset, or since he says, it may not be a correlated asset. It might be an option for you to rebalance, sell some stocks, buy crypto, or vice versa, sell some crypto to buy stocks. That's basically what rebalancing is. It also might be an option for tax loss harvesting, when appropriate, of course. And tax loss harvesting obviously is only going to be in our taxable accounts. It's not going to apply to our retirement accounts or 401ks or IRAs or anything like that. Now, this one may actually be true. As of this writing, Bitcoin is down around 44% in the last 12 months, and it's down around 58% year to date. So yes, if you had Bitcoin and you sold it, you could write off those losses on your taxes, tax loss harvesting. So while that's true, I certainly would not recommend that you invest in something for the purpose of being able to write it off on your taxes. Now, to be clear, though, in 2022, basically everything minus energy is down. So I'm not knocking Bitcoin simply because it's down. My point is that buying something just so you have the ability to write it off in your taxes, it's not a good reason to buy something, whether that's Bitcoin or anything else. And so those are the 5 reasons that Ric thinks that you should really consider having 1% of your investments into some kind of cryptocurrency. There's like ETFs out there that have this, so you can you'd probably be able to buy it through your Fidelity, Schwab, TD Ameritrade accounts. But as you can probably tell from my tone and from what I'm saying, I am not keen on this idea at all. It's not an investment that produces any type of service or product like we see with Apple, Walmart, Home Depot, Lowe's, etc. The real world utility of crypto right now is really, really small, especially in a place like the United States. Sure, there are people in other countries who don't have the same economic and political stability that we do here. And so they may need to get paid in more discreet ways where the government can't seize it, or where inflation, inflation doesn't, completely ruin their currency. And I know inflation's high here, but I'm talking like 50 to 60 to 70% inflation in these other countries. So we do have it much better than folks in a lot of other parts of the world. But here in the U.S., in terms of real world utility, unless you're going to blackmail someone, unless you're going to launder some money, or you're holding someone for ransom, I don't see any utility for us here in the U.S. I don't see any at all. However, if you could get to a spot, if we could get to a spot where cryptocurrency and the blockchain technology could just be a stable store of value, something where the price did not fall 58% in 6 months, but the value stayed relatively stable, and you could use this to buy goods and services and send money with lower fees to someone maybe internationally, I'd actually be much more bullish on this. And maybe it'll get there in the future, but that's definitely not what it is right now. It's way too volatile, and people just don't have the need to use it in that way right now. So that does not mean, though, that the price will not go up in the future. I haven't checked today, but yesterday I think I saw the price at around like $20,000. But it changes so much on a day-to-day basis, so it won't even provide much value to if I said the price today. But it does. This whole point that I'm making does not mean that the price of cryptocurrency and Bitcoin is not going to go up. It certainly could. There's a lot of crypto evangelists out there, but it could also go to zero, especially when we consider that the majority of crypto holders bought their very first coins in 2021, and they are all holding their positions at a really massive steep loss right now if they have not already sold their positions. And if they've experienced a 40 to 50 to 70% decline in their value in less than a year, what do you think the odds are that they're going to come back for more? Seriously, what do you think the odds are that those people who have taken a massive loss are going to say, you know what, I want to do that again? My guess is that they're going to feel foolish for falling for this, and they're going to move on with their investing lives without going back to crypto. And that's really going to diminish the future value of Bitcoin and all the other cryptos out there. So, should you put 1% of your investments into crypto? Well, that is definitely your call. I am absolutely not going to be doing that with my own money. So, thanks for watching. Hope you all have a great day.